Well, hello, hello, welcome. Tax Prep 2018. This is Robb Reinhold, and I am known as the tax guy here at Maverick. Now, that automatically probably makes me the most boring person, but I actually really like taxes, and I know that's a very strange thing because, people typically don't like to do taxes. I love it. I remember when my daughter turned 18, I was like, "Oh my gosh, we get to do your tax return together." And she's like, "Dad, what is wrong with you? You shouldn't be excited about that." Now look, let me tell you what I found out over all the years of doing this. Um, I started trading back in 1997, and what I found is that back in 1997, nobody knew how to do trader taxes. And and I'm not saying that because they were ignorant. I'm just saying that it was so new. Remember, before the internet revolution, before we had internet, the average person couldn't be a trader. You had to be on the floors in Wall Street. So there were no CPAs that knew how to do trader taxes. So I remember when I had to go do taxes, my first year of making some good money was in 1998. And I remember I made six figures that year, and I could not find anyone to help me with taxes. I finally found one person, and he said, "I'll give it a shot." I remember having to file an extension, and I had to account for every single gain and loss I had over the year, which was it was a big, long stack of papers. And altogether, I think he charged me like $4,200 just to file my taxes. So I realized that I needed to learn how to do this, and no one I found knew how to do trader taxes. Now, like I said, back in the day, it just was so new that people didn't know. Fast forward 20 years, people still don't know. If you go to an average CPA, they have no idea how to do this. This is why I absolutely love to do this session. I had no intention and no desire to learn all the things I've learned about taxes. Look, I I did not want to be and know any of this stuff, but I knew that I had to learn it. It was part of the business, and I've spent a lot of time talking to people, reading articles, uh, pouring through the IRS website, and this is one of the things I love to do this session. I love to do this session. I know it's weird to say that, but it's boring. It's taxes. But I've spent so much of my life trying to figure this stuff out that I figured, look, let me pass this down to our traders so they don't have to go through all the effort that I did. Let me just pass that down. So I love to do this session, and please indulge me. It gives me a way to justify all of the time and effort I've put into this by hopefully helping other people. So in this session, what I'm going to do is I'm going to go through basically all the ways that you can file taxes as a trader. I usually get a lot of questions at the first part of the year about taxes, and I find out the more in depth I get in this session, the less confusion there is for our traders, and they have a much clearer view of what to do on their taxes. So in this session, I'm going to go through multiple ways of filing taxes, and I understand that for you, there may only be one that's applicable to you this year. However, there might be a change next year, and you're going to know what to do for that. So let's go ahead and jump in and get started. All right, so again, ways to file taxes as a trader. All right, so we've got individual, we've got corporation, we've got contractor, and what it really comes down to is the Social Security number, the tax ID number. So here is the rule. If you have an investment account or a bank account, this is the same rule. Whatever tax ID number is on that account, that person or entity is required to report that income and loss off that account. So again, if you have an investment account and any of your investment accounts have your Social Security number on it, well then you are going to be filing taxes as an individual. We're also going to be covering filing taxes as a corporation. I'm hoping that every single person has seen the trading as a corporation video. It's very important. It's again, I don't want to go into it in this session. I'm going to try to stick on the topic of just talking about taxes and not talking about how you should structure your business and your life. But we're going to talk about filing taxes as a corporation. Then we're going to talk about filing taxes as a prop trader or an independent contractor. So we're going to cover all three of these. Now, I understand that you may only be doing one of these, but also there are going to be some of our traders that are doing all three. So let's go ahead and jump into doing taxes as an individual. All right, so as I said earlier, this is all about the name and the tax ID number on the account. So if you have an investment account, and again, I'm not talking about retirement accounts. You don't have to file tax returns on retirement accounts, but any other account that has your name and social security number on it, you have to file those taxes as an individual. So here's the basic rule. The IRS has said that if you're an individual and you make money in investments, in the stock market, in real estate, that income is going to go on to Schedule D. Schedule D is capital gains and losses. So this is capital gains income. All right, so this is one of the worst tax rules in the U.S., and I think it's the worst thing. And here's the rule that you must report all income. You must report and pay taxes on all income. So if you make $100,000, you must pay taxes on all that. However, if you lose $100,000, they say, oh wait, you can only deduct $3,000. Now first time I saw this happen was back in 2000. So in 1999, the NASDAQ went up 68%. It was in the dot-com boom, and online trading was this new craze. And everyone was like, hey, you know what, that sounds cool, let me do it. And so everyone jumped in 1999, and they only knew how to go long, and so they bought technology stocks. And there were people that made a lot of money in 1999, even though they didn't know what they were doing, because they were long the market, and the market exploded higher. So let's just take an example. Let's say they made $100,000 in 1999. And then the market crashed in the first quarter of 2000. And let's say that in 2000 they lost $150,000. So they lost all their gains and then more. When they went to go file their taxes, they found out, wait a second, in 2000 I could only deduct $3,000 of my loss. Now again, they will let you carry that forward for as long as you live until it either runs out or you run out. But this, again, incredibly unfair. They had to pay taxes on all the gains, but then when they lost it, they got $3,000. So what some people tried to do is they tried to say in 2000, no. In 2000, I was doing it as a business. It's Schedule C income. Now with Schedule C income, you have an unlimited yearly loss limit. So Schedule C income, you could deduct the entire loss. Well, this case went to the courts, and the courts ruled in the favor of the IRS. And there are now certain rules that if you filed your taxes as a Schedule D 1 year, your trading gains as a Schedule D 1 year, if you want to change it to Schedule C, first of all, it has to be in a year that you have a gain. And then they have all these other requirements. You got to have business-like attitude and business-like records. You have to have substantial trading activity, and your trading activity has to be your main source of income. Again, we talk about all those in Trading as a Corporation video. It's very difficult to meet that definition to be a Schedule C trader. But again, I don't want to get into why you should trade as a corporation. We've got a video on that. So if you have an account with your tax ID number on it, your Social Security, then you're going to be filing as most likely Schedule D. Very, very few people can qualify as Schedule C, and I don't think anyone here is going to be even trying that. All right, so let's talk about filing as an individual business. So again, if you are filing as a business, I talked earlier about you must prove it's a business. We go through these in the trading as a corporation. Again, you must have substantial activity, business-like records. I read somewhere that you must have somewhere between, they want to see greater than 1,000 trades in a year. Boy, that is a lot of trading. That is a lot of trading. That's basically 40 trades a week. So, again, unless you're a crazy scalper clicking the buttons as much as you can, this substantial activity is going to be one of the difficult ones to do. Now, if you do that, you want to, if you can meet this Schedule C, then you want to choose mark-to-market election. Now, again, the mark-to-market election, we talk about this in the Trading as a Corporation, it gets rid of the wash-save rule. And basically, it's a really easy way to do your taxes. Now, remember, I told you in 1998, I was day trading, and I was clicking the button quite a bit. And I want to say I had about 1,100 trades that year. I know. Don't judge me. There's a reason I don't do 1,100 trades, because it's exhausting. And when you're trading that much, you don't keep records. And I remember that I had to put together every single buy and sell for my accountant. It took me months and months and months because I was Schedule D. If you are Schedule C, and again, specifically mark-to-market election, we're going to talk about doing mark-to-market accounting on a corporation as well. You basically take the balance on the first. So if you have a $100,000 balance on the first, and then you take your ending balance on December 31st, let's say it's 150K, it's really easy. You do not need to report individual trades. You just simply report, I have $50,000 of gains. And again, because you're doing it as a business, the IRS does not require Walmart to individually report every single t-shirt, where they bought it, where they sold it, and when they sold it. They just let them do the net amount because it's a business. So if you're able to file as a business, as a trader, this is the way you're going to do it. I don't want to spend a lot of time on this because not many people are going to be able to qualify for this. But again, it is an option for some of you. Schedule C. All right, but let's just talk about how it's really going to work. Most of you are going to report Schedule D, and it's very simple. It's very, very simple. And now they've got downloads. You can simply download your profit and loss statement from your brokerage. And then again, it's going to go on to Schedule D. Schedule D, you're going to list all of your buys and sells and your gain or loss. And then you're just simply that's going to be included in your tax return. And you're going to just simply pay taxes on it. Again, it's fairly simple. It's just one of the lines on your 1040. Remember, the 1040, in case you don't know, the first page of the 1040 is where you list your income. So again, it's going to have like, how much did you make in W-2 income? How much did you make off of Schedule D income? How much did you make off of K1s? Again, we'll talk about K1s here in a second. So you just list your income. So again, if you made $20,000 in your trading accounts in your name, you just simply put that amount there. It's going to be part of your adjusted gross income. When you total up all your income together, that's called your AGI, or adjusted gross income. All right, so that again is pretty simple. Trading as just a regular person, pretty simple. All right, so let's talk about taxes on years of the loss. So again, if you have a gain, you're going to put your gains on that Schedule D line. Again, the first page of the 1040, they're going to ask you, what is your income? And again, on years with the loss. All right, so remember, we talk about $3,000. So there will be a $3,000. The most you can put on that line for Schedule D income on the front page of your 1040 is minus $3,000. That's the most you can put on that line. Anything else will be carried forward. Now let's talk about deductions. One of the other things we don't like about Schedule D income is that the IRS says, you know what, you cannot deduct all that much. Because again, they consider this Schedule D income as that this is not your business. This is something you're doing on the side. And since you're doing it on the side, we are not going to allow you to have business-like expenses because this is something you do on the side as a hobby. So basically, they've said that the only deductions you can have are the direct expenses of the buy and sell. So basically, your commissions. That's what they allow you to do on Schedule D. Now remember, Schedule C is I'm doing this as a business, so they allow you to deduct computer, internet, cell phone, monthly dues, all the things that we talk about. They allow you to have these deductions. So again, most people are going to be forced into Schedule D. I hope that if you did it this year and you realize that it's fairly painful that you were not able to deduct any of your expenses that you spend in trading, I hope that encourages you in this year to go ahead and get your trading corporation or LLC set up and going. Again, you're in the business, you're doing it. You may as well spend a little bit of time and money to structure yourself so you can get these deductions. You can get these deductions and you can get this unlimited yearly loss limit if necessary. Like I said, you're in the business. You've already spent money to do it. You've already spent time. Just structure yourself so you get the benefits of it. Wow, I told myself don't make this a push for for a reason for people to go run out and get their corporations, but I can't do it. Whenever I talk about this, it's one of these things that just makes no sense when people don't do it. All right, let's now switch into filing as a corporation. All right, so this is really what we talk about in the trading as a corporation video. You can trade under your own name and your own tax ID number. And if that is so, you're going to be forced into Schedule D income for most of you, and a very few people can fit into Schedule C. You want to get the deductions allowed. So by forming a corporation, and again, your corporation, you set it up, and again, you're trading under your corporation. That means that the trading account is a corporate account with your corporation's name and your corporation's tax ID number. Remember, whatever tax ID number is on the account, that person or entity is responsible for filing the taxes for it. Now, the great thing about doing this as a corporation is it already shows the IRS, hey, this is a business. You don't need to meet the Schedule C requirements. Remember we talked about if you do it under your own name and you try to qualify as a business, you're trying to prove to the IRS, hey, I'm doing this as a business. Yes, I'm doing it in my name, but I'm really doing it as a business. It's so much easier to just do it as a business. That automatically shows the IRS your intent to trade as a business. All right, so here is the rule. This is how it works. So the income that you make is just business income. So if you make $10,000 trading, that's the same thing as a coffee house having $10,000 of income. It's the same thing. That being said, you need to put the income in the right place. All right, so this is what the IRS has determined. Now, this was very murky when I first started out. Where do you put trading income on a business's tax return? Now, like I said, when I first started out, this was unknown. And what happened was a lot of people started to use this 4797. And then the IRS said, okay, that sounds good to us. And now that's kind of the standard. So Form 4797 is called business property income and loss. So again, business property income and loss is what 4797 is. So basically they're saying that we're going to consider it business property. It makes sense because look, if you are a retailer, let's say you own a clothing store and you sell t-shirts. Well, your property is your t-shirts. You buy a t-shirt for $20, you sell it for $30. That's your property. So they're going to say, we want you to list this on Form 4797. But again, because you're a business, you do not need to list every individual t-shirt that you bought and sold. You just need to put in your gross amounts. So again, you can put in, my business trading account at Thinkorswim or TD Ameritrade. It started the year at $100,000 and it ended the year at $127,000. All right. That means that you would have $27,000 of income. Now again, that is business income. Now you get to deduct your business deductions. So what were your expenses? Well, we talk about those expenses in the Trading as a Corporation video. internet, cell phones, some part of your cable bill to watch CNBC, you've got your annual meeting, you've got your dues, everything you've spent, you may be able to deduct, let's say, $20,000 off of this amount. Now again, in a business, how much their income is minus their expenses, that equals their gross taxes, or sorry, their net taxes. And in this case, even though this business made $27,000 trading, it only needs to pay taxes for $7,000. Right, so that is going to be what the business made that year after expenses. All right, now this is where we get into a little bit of what kind of corporation it is, who pays the taxes. Now, we talked about in the Trading as Corporation video, a C corporation, the corporation pays the taxes. So, if this was a C corporation, this C corporation would owe taxes on $7,000. And this corporation would literally write out a check, or again, I know checks are old school, they'd send in a payment to the IRS for their taxes on $7,000, which would say they're 20%, it's $1,400. Most trading companies and businesses are either S corps or LLCs. And S corps and LLCs, the shareholders or the members, basically the same thing, they pay the taxes. So again, it's called a flow-through corporation. The reason it's an S corporation, they call it flow-through. The money comes in to the corporation, but then flows out to the shareholders. Flows through the corporation. So again, the shareholders are going to get a K1. So in this case, let's say you were the only shareholder or member for the S Corporation LLC. Well, you are going to get a K1 for $7,000 of income. So again, when that business files its tax returns, there's going to be a form in there called a K1, and it's going to be, it basically will say, give this K1 to the shareholders. Now, if you and, let's say, you and a partner own this LLC together, well, then you will both get a K1 for $3,500. You will get one for $3,500. Your partner will get one for $3,500. If you and a spouse own it, again, depending on how it is owned in the corporation. If the corporation's owned 50-50, then it will be divided 50-50. If the corporation's owned 70-30, it will be divided 70-30. So again, you will get this K1 from the business, and then this K1 is going to go on your individual tax returns. So let's kind of go through the flow here just to make sure everyone understands it. All right, so again, the money is made in the corporation. So the money stays in the corporation's hands. But the corporation must file a tax return. And it says, okay, well, this person, and again, I'm going to make math a little bit easier here. I'm going to say that at the end of the year, the K1 was for $10,000 of income. All right, so $10,000 of income. Now again, remember, this has already had expenses taken off of it, which is actually really cool. So this probably was more closely to $30,000. But again, they were able to deduct expenses. Now their taxable income is $10,000. Remember, on the front form of your 1040 front page is where you list your income. You list your W-2 income. All right, let's say that you made $50,000 at a job where you were paid W-2. There's going to be a line down there that says K1. This is where you're going to put your income, your K1 income. And then again, you add up all of your income sources and it comes up to your adjusted gross income. Now the cool thing is the second page of your tax return is your deductions you get to take. So again, this is where you can take your standard deduction or itemized deductions. One of the really cool things about a business, and again, I love this, and this, again, I don't want to say it sounds shady, but because this is all legal, but here's a great thing is that when you do your life like this, I get to take all of my deductions off of my income, and then I get to take my standard deduction on top of that. If you are just an individual, you get a choice of what's called your itemized deductions, which are the things that the IRS allows you to deduct off your taxes as an individual. Or you get to choose what's called the standard deduction, where they say, hey, if you're a human being and you have 3 dependents, you get to take this much off your taxes. But the IRS doesn't let you take both. They say you can take whichever one is greater. So you can take your standard deduction or you can take your itemized deduction. Do you realize that basically you're taking a lot of your itemized deductions out of your income as a corporation, and then you're getting your standard deduction? I'm telling you what, this is a big deal. This is a big deal. So I hope everyone has watched that Trading as a Corporation video, because this alone will save you thousands, if not tens of thousands, every single year. And again, and this isn't even if you could make money, break even, or lose a little bit trading, you're still going to make some money. Right, so again, a K1. Corporations are going to give you a K1, and then you take that K1 and you put it onto your own personal tax return. All right, let's talk about if you are running a loss this year. So let's say your corporation, let's say this year you did not have a good year of trading, and you had a $10,000 loss in your trading activity, plus you had another $5,000 of expenses. Again, the IRS understands that not all companies make money every single year. They understand that sometimes you have losing years. What people don't understand is a lot of corporations were created for the purpose of making a loss. They were made for the purpose of losing money. So again, let's say your corporation had $10,000 losses in trading, $5,000 in expenses. It has a $15,000 loss. Again, that goes out on a K1. All right, so let's go back to your front page of your tax return, the 1040. It says list your income from your job. All right, so let's say you made $50,000 from your job. List your income from your K1s. Well, this is where you're going to put negative $15,000. And then you add up everything down here to your adjusted gross income. Your adjusted gross income actually went down to $35,000. Now remember, you already paid taxes on $50,000. If you had W-2 income, you've already paid taxes on that. You've overpaid your taxes, so what are you going to get? You're going to get a refund. So you can see, even let's say this corporation just broke even, had in the end broke even in trading, but had $5,000 in expenses. You can see it still reduces your taxes. It still reduces your taxes, and you get refunds. So again, this is just such a no-brainer to me. I keep trying to get back to selling the corporation. Look, I just want to walk through taxes. This is how you do the taxes. So again, hopefully everyone understands. If you've got a business account, an LLC or a corporation, it files its own tax returns. It provides you, the shareholder, or however many shareholders there are, a K1, and each person pays taxes individually on their portion of the income or loss. All right, so that is trading as a corporation. All right, let's next go to trading and filing corporations as a contractor. So with Maverick Trading, again, you are an independent contractor. Now remember what I said earlier. Whose ever name and tax ID numbers on the account is responsible for filing and paying the taxes. When you trade for Maverick, we provide you a sub-account of our Maverick master account. It has our name on it and it has our social security number on it. We are simply saying you are contracted to trade this account, and we will let you keep up to 80%, between 70 and 80% of the profits. And when we pay you out those profits, we pay you those out as an independent contractor, which is considered 1099 income. All right, so again, it's really, really nice and easy filing as a contractor because, number one, technically speaking, you didn't have any trades to report. And again, I want to make sure people understand that because I get this question quite a bit. You do not need to report any of the trades because they were not done under your tax ID number. They were done under Maverick's corporate tax ID number. We have to do all the reporting. So all taxes and reporting are done by the firm. There's no need for you to file mark-to-market forms. We've already filed them. We've already taken care of it. So trading as a contractor is so nice because we basically, whatever we paid you out during the year. So let's say during the year you took $25,000 in distributions. At the end of the year, we simply send you a 1099. Again, we send you a 1099, and we also send the government a 1099, telling both of you that we paid you $25,000 of income during that year. Now remember, that income is consulting income. Again, we hired you as a contractor to do work for us. You did work for us. You helped us grow our accounts, and we paid you $25,000 for that assistance. So again, this $25,000 is considered self-employed income. So again, if you filed your paperwork as an individual, and again, sorry, and let me clarify the paperwork. When you were approved for capital sharing and you started trading on behalf of the firm, we sent you a independent contractor agreement. And if you signed that agreement as you, as the individual, we will send you, the individual, a 1099. If you signed that as your business, so let's say that you had AAA Trading LLC as your business, and that was what filed the paperwork, and then you gave us that tax ID number, well, then we will issue a 1099 to that business. So if you are listening to this and you think to yourself, wait, I want my income to go to my corporation, not to me, this is where you need to get in touch with us soon, because by law, we have to get all of the 1099s out by the end of January. So you can call us up, say, hey, Rob, will you send the 1099 income not to me, but will you send it to my corporation or LLC? Let me know by January. After January, we will not make any changes to that. So again, it's very nice and easy. So that $25,000. So let's say that you filed it as a individual. Let's say that you just put your individual name on the paperwork. Trust me, that's fine, because here's the great thing. That is considered self-employed income, which automatically is considered Schedule C income. So remember, what does that mean? You get to take deductions off of Schedule C income. So if you're trading for Maverick, we send you $25,000 during the year. We send you a 1099 for $25,000 on your tax return. They're on Schedule C. They're going to say, how much were you paid in Schedule C income this year? You're going to say $25,000. Great. What are all your deductions? And again, they'll list all the buckets for deductions. How much did you spend on internet? How much did you spend on transportation? How much did you spend on this and this and this? You're going to add up. Let's say you add up $10,000 worth of deductions. Your Schedule C income is going to be $15,000 that year. And again, that's going to go over to the front page of your 1040, where it says, how much did you make in Schedule C income this year? And that's what you'd report. So the great thing is, when you trade for Maverick, it's already Schedule C income. You do not need to worry about Schedule D. And again, this is where if you're only trading for Maverick, I would say, and people say, Rob, I'm only trading for Maverick. I don't have any money elsewhere. Does it make sense for me to open up a corporation? I've got to say, not really. Not really. Now, look, there's some small benefits, but really, the big benefits, you're just fine. But the second you trade outside of being a contractor, then all of a sudden it makes a lot of sense. It makes a lot of sense. All right. So again, that is if you get paid the 1099 to you personally. All right. Let's go through. What if we paid your business? Well, this again is the same thing. We paid your business $25,000. So at the end of the year, we will file a 1099, send it to you and the government that we paid your business $25,000. Then again, it's going to say, okay, how much business income did you get this year in your business? Well, $25,000. What were your expenses? $10,000. This is your business income and loss. So your business income and loss would give a K1 to you or your shareholders for a total of $15,000. All right. So you can see, very, very simple. This is a very, very simple method to do the taxes. All right. Let's talk about this one, retained earnings. All right. Retained earnings, this is where, let's say that you had a profit at the end of the year. So let's say that you were trading let's say you were trading a $100,000 Maverick account, and let's say you didn't want or need to take any distributions during the year, and let's say at the end of the year you had $125,000 in your account, and you say, look, guys, I don't need it, I don't want it. All right. Now, here is what our accountants have said. If it's too big, we're going to force you to take it. In your paperwork that you signed, we actually have a clause in there that we're basically going to force you to take it out if it's too big. But sometimes we'll allow you to keep it there for retained earnings. If it's just a small amount. Basically what retained earnings is, the best example I can give of retained earnings is, imagine that you are a salesperson. And in December, you make a sale for $100,000 of equipment. And let's say that you are paid a 10% commission on anything you sell, but you're paid 30 days after the sale. So you technically made the sale in December, but you don't get paid till January. Now, the company that you're selling for, they got the money in December, and they owe you $10,000. So on their books, they would actually have to show that they have an accounts payable to you of $10,000. They owe you $10,000. Now you, on the other hand, you would put on your books that you have accounts receivable of $10,000, meaning someone owes you this, but you just don't have it yet. This is the best example of retained earnings. So again, if you make money in 2018, you didn't take it out, we technically owe you that profit. But if you want to leave it in, you can leave it in, and that's just as retained earnings. All right, so again, that's again not a real common thing, and anyone who has any sort of issue with that, we usually call them in advance and we discuss what we want to do with that. All right, so let's just go through the quick flow. Again, the flow is, again, you are trading for the firm. The firm has the capital. It makes the money. We simply give you a 1099 for what we're paying you as a contractor. And again, the agreement is we're paying you between 70 to 80% of the profits you generate for the firm. We pay you the 1099. If you are an individual, it goes on your Schedule C. If you're a business, it just goes into your business. And then it goes, goes right onto your 1040. All right, now let's talk about losses. What happens on a year that you have a loss? All right. Now remember, the structure is that you are trading a sub-account of the firm's. Our tax ID numbers on it are taxes. So if you had a loss in your trading account at Maverick, we had the loss. We had the loss. And because you didn't take any distributions out, if you didn't take out any profit distributions during the year, we, by law, we don't have anything we can send you. If we contracted with somebody to do work for us and we never paid them for the work that they did, there's no documents to send. And so the only time you'll get a 1099 is if you made a profit and took a distribution. So if that did not happen to you, you can still take deductions. Remember, you're doing this as a business. You can contract with people, you can have expenses, and let's say you don't make any money doing it, you still did it as a business. So on your own personal tax return, you can still deduct all your expenses. We talked about this in the Trading as a Corporation video. But again, you basically have to decide, okay, what were my expenses? And the best way for me to illustrate expenses is I call them buckets. Now, if you go onto if you go into your tax returns, the IRS will basically have buckets already. If you're a corporation, they know that corporations spend money on utilities. So they'll literally have a line for how much did you spend on utilities. They'll have another line for dues and subscriptions. That's a bucket. How much did you spend? How much of your expenses went into that bucket this year? And then they'll have like consulting. How much went into that bucket? And they'll have things like bad debts. How much went into that bucket? So the IRS has created these buckets. And when you were looking at all of your expenses for the year, you basically just need to decide what bucket it goes into. So again, I'm just going to use an illustration here. So let's say you had $100,000 of deductions. I know that's a lot of deductions, but let's say business has $100,000 of deductions. Again, they need to decide what buckets are going to have it. But again, all the buckets have to equal $100,000. So let's say that they spent $20,000 on utilities. They spent $40,000 on consulting. They spent $10,000 on membership and dues. And they spent $30,000 on wages. So again, it goes into buckets. So when you're looking at your business expenses, you basically just need to say, okay, what bucket does it go into? Now, some things are pretty easy, meaning that the utilities, your internet, your cell phone, those are pretty easy. They go into the utilities bucket. Other business office expense, a computer, things like that, they've got their bucket for that. This one is a question here, the risk deposit. What bucket does that go into? I know we have a lot of traders either put that into consulting, or I've even heard some of them put it into the bad debt. But again, it just goes into one of the buckets. So again, this is probably one of the most common questions I get is, okay, risk deposit, how do I account for that? Well, you need to put that into one of the expense buckets to be able to deduct that. All right, so let's go ahead and wrap this all up. So we covered the 3 ways. We covered doing this as an individual. Pretty simple. Everything goes on to Schedule D. Unless you're crazy and you think you can qualify for Schedule C, go for it. But for the most part, it's going to flow to Schedule D. If you have a corporation, your money is going to flow in through the corporation. You're going to deduct all your expenses, and then that income or loss is going to flow onto your own personal tax return. And again, there's going to be a line that says, what is your K1 income or loss? If you're trading for Maverick, then again, we're going to issue you a 1099. That 1099 is either going to go into your personal Schedule C, and then you're going to take your deductions. If you contracted with us as a business, it's going to go into your business tax return as general income. You take your deductions, and it flows over to your personal tax return. All right, so hopefully I covered a lot of the questions you had. I am always available for tax questions and any questions, to be honest with you. My email, Robb, R-O-B-B, @maverickTrading.com. You should have it. Let me point you to what I believe is the best source. Bob Green, he's out of New York. Bob Green is always a guest speaker at all of the Traders Expos. In my opinion, and this is not hard for me to say, pretty much in everyone's opinion, Bob Green is the expert in the U.S. for trader taxes. If you want more info, his website is full of great articles on taxes, how to do them. He does stuff on prop trading. He does a lot of information. Yes, he's a company. Yes, he will do your tax returns for you. He'll do all of that. Again, he is the best in the business, and that means the best in the business usually costs the most in the business, and that's true. But again, if you have a complicated tax scenario, I highly recommend Green Trader Tax. If you have a simple tax structure, I think go to the website, learn a little bit, figure it all out on your own, and you'll be just fine. All right, thank you so much for joining me, everybody, and happy taxes. Hopefully you will learn to love it as much as I do. But I doubt it, but let's have that goal. All right, see you.